Carter, well, let's take a look what's going on, right? So I think, am I on ETH? Let me go on regular. So this is our weekly time frame, right? So if you guys look at it, obviously we have a little bit of a ledge on the top. The value shifted, it's overlapping higher, right? So you guys can see the value area high, value area low is shifting higher, right? And then you can also compare the volume like on the bottom and see, right? So if you look at this, nothing crazy that sticks out, and you can go kind of on a daily time frame as well to compare it, right? But really no difference between the 2 weeks here, so not much to. I would say that bias is still the same. We are accepting the value lower, right? So we were here, then we tried to peek inside in that LVN. If you guys remember, we got rejected out of that zone. We got back to the value area high here. We failed there, and now we opened here. We're back, almost to inside the value here. We tapped the 21, which was the level that was it Wednesday, or I believe it was Wednesday. When we talked about this level that we were closing our shorts here, we were targeting 1675. I think we hit like 17 and a half or whatever we hit the low here. This was the level that we were targeting because this was our previous week value area low. And for newer folks, right, what that means is that last time when we went below the previous week value area low, you can see that we auctioned higher twice here, and then we went below, but then ultimately they brought it back inside, so they said no to this value here. Similar happened here, but what is the difference, right, between this one and this one? What is the difference between these two bounces?
Made a higher low.
We made a higher low, right? So we do have a higher low, but we also have a what? We have a higher high in terms of weekly, right? So you have a higher high and a higher low. So that you don't treat that from weekly perspective as too bearish. What would make you guys extremely bearish tomorrow? Tomorrow's Friday, I believe. Yep. So Friday, what would be the ideal close you guys want to see if you're a bear?
Making a lower low on a weekly, closing below that 80.
Yeah, that's correct. So we will need to take this out, right? And this would mean that we are doing what on a weekly time frame?
Framing down.
Framing down.
Yeah, that'll be weekly framing down. And then if you're not familiar with the concept, right, this would be just a new lower low on a weekly time frame. And that's important. A lot of people, sometimes people get in, even intraday, they're like, oh, I see a hammer candle, and I'm just going to get in here without getting a confirmation that we're putting in lower low on something, right, on the naked price charts. People make that mistake even on, higher time frames. So I would say, let's see how we close. If you're not able to clean this up, like let's say if you're not even able to clear 917 tomorrow, if we come close to this 21 level, probably a good long, right? Because then you have this setup. Do you guys remember when we have this stacked value areas here? So this becomes a nice little zone on the top side. If you guys look, and I highlighted this because this is our daily zone. Well, you'll see here in a second. So look at the. One second here. Let me remove this. So here's your daily zone. Do you guys see the similar setup on the daily? Just on the, I would say, opposite side. What level do we have to regain or cross over for you to be extremely, okay, we're going to the value area high? Because if you're able to get over a certain level, you're targeting this zone. You'll be somewhere around here. So this is your bracket right now of playing field. And then what can you do here to confirm this playing field? There's something you could do, and it would give you a really, really good levels. What?
Fixed volume profile.
A fixed value profile, right? And now look what it's given you. It is giving you the first segment for 2 weeks is sitting right here, right? So that would be right here. And then the bottom one is sitting kind of like right here now. And that would also be first sig, which just means first standard deviation. Is anyone not following this from you folks? Or anyone else from on the call? It's like, what are you talking about, sigmas?
Yeah, what are you talking about? I've seen you do something with volume profile, but I never saw that on my trading view.
Well, do you have FRVP on your trading view? I think you do.
Yep.
Oh, okay. So if you select this, right, I'm just picking the range. So what I'm doing is I'm combining basically the two volume profiles, right, or 2 weeks. I can also do that with the TPO, right? So if you guys are not familiar, I could do this and I can merge this profile, right? Now it's going to combine it and there it is, right? So this would be kind of, if you're combining the two, this would be the level you're watching. And if you're looking at here, it's a tiny little guy somewhere around here. On volume profile, what we care about, right? We care about the first standard deviation, right? Because this is a game of statistic and probabilities, if, as you guys know, right? So where's that little thingy here? There's a way to do it here, but maybe I'm not that artsy. I mean, just draw it. So if you guys think about the standard deviation, right? The bell curve. So you have this right here, the mean, and then you have the first standard deviation is what? 34.1, right? So for newer folks and for you, college. So this is 34.1 right here. This segment right here, I'll color it. This right here is 34.1%. And if this one here is also 34.1%, then the next one here is our second standard deviation, and third one would be the 99.7. This would just be total 95, 95, and this one goes to like 99.7, okay? So what we care for when you have a bracketed market, right? So when you're in a bracket like we are, right, we're staying inside this balance. We peaked below, we got inside, we went above. We're obviously not liking any ranges right now. Market is just awaiting more information. And that information is coming tomorrow, right? So we're going to know which way we're going probably tomorrow. Do you guys know why?
Payroll, non-farm payroll.
Yeah, so I would expect them to crack this. And if they crack it and fail immediately, it gives you a good setup that you can go and fade that, right? You can go to the opposite side. If they go and they don't really quickly reverse it, we're going to go with that. We're going to look for bounces and continue higher. If they do the same, on the bottom, we're going to go ahead and do that on the bottom. So we just have to watch for, quick peaks above, like where it goes something like this and fails. If you see this, then we're watching, buyers are going to step in and we're going to find the next levels. Does that make sense? But bell curve, what this is showing you, what I call first sig, is your first standard deviation. So that's this area right here, right? So in terms of standard deviation, that's this right here. Does that make sense to everyone?
Yeah, isn't that just value area high and value area low?
Exactly. That's just the value area high for 2 weeks. Because we're inside a bracket. That's all it is.
Yeah, so where do you get SIG 2 and 3 then? That's what I don't get.
Okay, so if I click on this, right, I'll show you what I do and what I did to kind of, I'll call it automate it. If I click on this and I change this, see how value area first one is 68, because 34.1 plus 34.1 would be 68. If I change this to 95, now it's going to show me the second sig.
Oh, okay, I got you. All right.
So now I have the
95 second.
That's correct. So now I have the second sig here. So the probabilities of us going to second sig and third sig, they decrease. And when the price goes outside of the mean, right, in the bracket markets, we tend to bring it back in, right? So that's why we find them. And the third deviation, so what I did, if you guys don't know, you can do this. So if you click here, let's say I click 68, and I do this, you can click here, save as template, right? And I can save college cash 68, right? And I can click this and save now. If I change this, for instance, for 95, right? And I just click here, I can save that one also as, college cash 95, not 65. So now when I go here, I don't have to do that manually. I can just click college cash 68, and here comes the first SIGs, college cash 695, and that's how quickly I find these levels. Does that make sense?
Oh, yeah, okay, I got you. So what was the third SIG then?
99.7. I mean, it's gonna be right at the top, right? So it's gonna be somewhere here. It's gonna be 0.3 of a whole move, right? So it would just be 0.3% of the whole move here and here. So this would be your third sig. It'd be 99%. So this becomes your selling range on the extremes, and this becomes your buying range on the extremes right here. If we were to go here, you peak above here, you sell. You sell aggressively. You crack, you come back, you sell. Okay, because you're driving it back to POC most likely here. Does that make sense?
A whole lot.
Yeah, perfect. Thanks.
Okay,
Hello, can you hear me?
we can hear you.
So this question might sound a little like stupid because I'm pretty new to trading. I just don't understand how to find a SIG and exactly what even a SIG is.
Okay. Have you taken any math classes? I'm not kidding.
Yeah.
Okay.
I
let me
mean, not
show you.
like college level, but like high school, yeah.
No, that's good enough.
Yeah.
So let me show you something. I'll give you guys a quick lesson. All right, there it goes. All right, so this is the volume profile, right, that you have. So what we care about when you're trading, there's only two things that well, three things that matter in market, right? And do you know what those are?
Not necessarily, no.
Okay. One would be price, right?
Yeah.
Without price, you don't get discovery. You don't know, just like a business, right? What do you do for a living? What do you do?
I have my own sneaker business.
Okay. What's your favorite, best sneakers that you sell?
Probably Balenciagas lately.
Okay. So if you want to maximize profits on Balenciagas, how do you do it?
Well, find the best price and sell it for the best price. Like find a low price and sell it for like just
Okay.
beat other people's prices. In a
Okay,
sense.
stay there, and I'll lead you to it, and you're gonna understand.
Okay.
When you say find the best price in in volume profile and market profile, do you see this value area low?
Yes.
Value area low means the value of this something Balenciaga shoes at this point, perceived value is low, so they're gonna buy it. When the value of something drops below the value, people buy it.
Right.
If you tell me that your Balenciaga shoes, let's say average price, I don't know what that brand, like what they sell. Let's say
Like
it's $100.
1,500 around there.
$1,500 for shoes. Wow. Okay.
Yeah.
That's crazy.
Pretty profitable market, I'd say.
That is okay. Now you got me. Okay, I'll give you $5. So let's say the Balenciagas, you find a supplier that can give you those at $25. What would you do?
I'm sorry, I had to close my door because my daughter. Repeat that. I'm sorry.
Balenciaga shoes, right?
Yeah.
So I'm trying to find. Let's say this is the chart, right? So let's say they're 294. Let's say this is 1294, and this is $290 for Balenciagas right here. Let's
Right.
say you find a supplier for your shoes at this level.
Okay.
At $290, and price somebody's like, I have these shoes for $290. What do you do?
Oh, I'd buy them.
How much? How many you buy?
I would try to load up on them, right? Because this price is low, right?
Okay,
I
so
would try
that's
to load up on them.
now think about the bell curve that's sitting right here, right? Like this. Majority of the time, market likes to trade within the first standard deviation, which means that 68% of volume on Balenciagas is going to stay within this price.
Okay, that makes
Price
sense.
discovery, right, of Balenciagas, I don't know, right? I'm just throwing it. Maybe it's from 1,500 to, let's say, 1,300 for a pair, if you can find them, right? I don't know how supply is. So that difference between here, 15 and 1,300, is how you find the pigs, right?
Okay.
Pigs get slaughtered when you buy it at 1,500. Because now if somebody's buying it to make profit on Balenciagas on 1500, if their range has been 15 to 1300, what are the odds that he's going to make money?
Very, very low.
Very low, right? So that's what the value area high is. You
Okay.
don't buy at the value area highs because that's the extreme of the bell curve on the upside.
Right,
So
you're
if
already
you-
at max value.
At the max value. So you buy below the value, you sell at the value. In between those two, right here, between value area high and value area low is your 34 plus 34, which is your 68%, which is your first standard deviation or first sig. So
So
if
SIGs, like, can I try to
Yeah.
kind of
yeah,
repeat it?
yeah, explain it. Yeah.
So a SIG is basically the two prices where things are the lowest point of a value and the highest point of a value, or is the SIG in between there?
No, so the first sig is where 68% of your price action on Balenciaga happens.
Okay.
So you give me your spreadsheet, and you don't have to include your revenue, and I'll give you what your bell curve is on your Balenciaga shoes. I'll build you a market profile chart of your sales. Same one, like one on the left. Like right here. I'll give you this chart. I just need price and volume. And I will give you the same exact chart with the value area high and value area low of your business.
What do you mean a spreadsheet? Like
Just give me your sales for a month. How many shoes you sold at
I'm
what
off
price?
market. I could give you like a Cash App slips, but I don't even have like, I basically just sell on eBay, and that's
You
really
keep track what you sell. So what I'm trying to lead you to, if you know how many shoes you're selling at 1500,
right.
If somebody's like, man, I'll give you 1700, how many pairs of shoes would you like to sell to him?
As many as he wants, right?
Okay, exactly. But if somebody's offering you $1,200 for the shoes, how many would you sell?
Yeah, I wouldn't really want to sell it to him. Yeah.
Exactly. So now think about this. Within a trading day, and this is what I was kind of giving you answer here, right? The bell curve and value area. This is directly from math books. The natural, like the law of the statistics is that if you increase the trials of a random events, right? If you flip a coin 10 times, odds are you're going to be 50-50 at the end of the day.
Right.
So the first bell curve here and market profile is just telling you that within the 68% for one day. So if this is our 1 day right here, trading, 68% of the volume was within this price of 292 and 294.
Okay.
So when the price goes above, look what happens. They sent it back to the value area low. When it went below, they sent it back up. This is you. This is exactly you with shoes.
Yeah, that when you put it in that perspective, it just kind of it makes a lot more sense. So basically the goal, right, is to get at the low level and sell high, like just to put it in simple words.
But in volume profile, you want to buy it at the value area low or below. When you buy below value something, then you're looking to sell it at the fair price, which is the POC, right? Which is this here.
So that would be where you're looking to put your where you take profits at, basically.
Your first profit target is always here when you're buying below value for us, for day traders.
And that's where the market kind of consolidates or trades sideways, right?
That's correct, because that's a fair price. And Wednesday. Man, I thought Wednesday was Friday the whole day. Wednesday, we traded at POC. My Burnside was going crazy. I know some of you guys were going. We traded there for 2.5 hours straight at POC.
Jesus.
And what that means is that you don't have other time frame people. And what other time frame people are is the big boys.
Yes, when I go to read this stuff, and I was trying to read the PPTs, I believe it's called, in there.
Yeah.
A lot of it, and I'm not saying that you don't explain it right, because now I'm understanding it, but when I'm reading it by myself, a lot of it just kind of sounds like gibberish. Like I'm like, what am I even? Yeah.
That's why you read it. I teach it, and then you read it, and then it makes sense.
Right. And then but something clicked the other day with with the shelves when I was watching Rocket's videos, and it's just because I've been asking him questions, and then boom, it starts to click. So hopefully that
I mean,
starts
shelves are
happening.
easy. No, I will. I mean, you have to stay. I would say, obviously, this is a different language for a lot of people, right?
Right.
Because you're learning something that it's not common, right? If this
Mhm.
was easy, I would say
Everyone
United
would do it.
States would, yeah, United States would be just a bunch of traders selling to each
Yeah.
other,
Yeah, they would.
right? So imagine if everybody sold Balenciaga shoes.
Yeah, nah. Then I would have to hop out the market.
Well, no, you would just have to be a patient
Right.
participant. You have to beat out the people that are eager to do it now, and you
Right.
would have to wait for your chances. So before you joined this Discord, this was a lot of people will laugh. My wife sent me to buy a Sprout. She was pregnant. She was like, "Go buy dragon fruits," and I'm like, "Man, like I don't know where the fuck to go to buy dragon fruits in Georgia." I go to Sprouts. I think I went to Sprouts or Whole Foods, one of the two. It was, I think, $22 for dragon fruit.
Yeah.
I called
Holy
her. I was like, they're out of dragon fruits. It's like they don't have dragon fruits.
Yeah.
I went 2 days later, and those dragon fruits were 2 for $6.
Oh yeah, yeah. That's crazy. What the hell?
Well, that's because, and I recorded that for myself, like I remembered it, because it's a really good example of, especially in that space where you have perishable items.
Yeah.
How long is a fucking dragon fruit gonna survive on a shelf before you drop the price if nobody's buying it at $22?
Well, yeah. So same thing with shoes is like the market lately has been kind of crappy. Because the market's so saturated, and I could kind of like compare it to the stock market. If the stock market's super saturated with buyers, price ends up going up. But if it's not, price ends up going down. Like, so same thing.
Yeah, treat it the same. Your thought process is right on. I think once you add these technicals where you understand where those points are, like these lines, value area high, value area low,
Yeah.
I think then you'll connect the dots. Because here, as a seller of those, what was the brand that you just mentioned?
Balenciaga.
Okay, those shoes. You want to sell above the value. When you're selling something, it's like I give people a lot of example of iPhone. If
Mhm.
somebody was to offer me, I have an iPhone 16, I believe. If somebody was to offer me $2,000, I'd be like, okay, here you go.
Right.
Right? It's
Because you bought
more
it for
than,
below that. Yeah.
yeah, I bought it below. And it was also, if you remember, the frenzy with PS5s. I have 3 nephews. I got them PS5s. I couldn't not get a hold of PS5 for like 6 months.
Right.
I promised I was going to buy them 3. And then somebody in the Discord was one of those guys that knows how to, I don't know, like buy fast on websites. They got it and shipped to me. And he's like, yeah, man, I just buy 10 of these at the value that Sony is selling them at 500. He goes on eBay, sells it for 1,300.
Yeah. There's so much.
But think
There's so
about
many
this.
things comparable. Yeah.
Let me give you this now. What about the late buyers of PlayStation 5 that bought it after the Christmas season and bought it in May, and then the supply from Sony went whoop, and this guy has also supply that's up here. What happens to him?
It will oversaturated. So now the guy who bought it, up there when supply was down, he just
Now
bought it for way too much.
He has to become an aggressive seller. He might have to lose money on this in order to
Right.
stay in
Yeah.
the game.
Yeah. Exactly.
So he has to drop the price. And how you maximize profits in your business or stock market is increase of price without losing the demand on your product.
Right.
If your Balenciagas are 1,500, maybe you put 1,505 and see if you get a bid. If you get a bid, people are willing to pay 1,505.
Then you could raise that next time.
And you raise it next time, and then when you see that it's stagnant, then you have to drop it. Then you're looking for buyers. So keep in mind, when we auction higher, you're looking for what?
When you auction higher, you're looking for buyers up top.
You're looking for sellers.
sellers.
I was waiting for you. You're looking for sellers. This will make sense to you.
Okay,
I
yes, I understand. I understand your question now. Because when it's going up top, you're looking for the people that are going to be selling to up there.
Exactly, just like you.
Okay.
I asked you earlier if somebody offered you 1,700, you said you would sell me whatever you can.
So they're trying to push price up. So when
You
people
meet the supply.
Right. Exactly. Okay, that
So the
makes sense.
liquidity, somebody's sitting on the right side. So you have you have the ask and you have the bid. Somebody's sitting here with a large number of something, and they're like, okay, well, if you want to get these shoes at 1,700, you have to come to this level, and I have a lot for you.
Yeah.
And it's the same what's happening now. If you're bored this weekend, if you have a CarMax near you, go pretend you want to buy a car. Spend an hour in a dealership till they kick you out.
Yeah.
And just offer, go buy whatever the hell car you're pretending to buy, and just offer 25K low, and then just increase it by 2,000 every time he goes to the manager and back.
Yeah.
Increase it by 2,000, and they're gonna ask you to leave. Then you're gonna understand the concept of, first you're gonna see their discounts and sales tactics, right? You're gonna see everything possible to increase the value why you should pay the full price. And then if you're smart, then you're gonna negotiate, right? So that's the concept. You auction higher to find sellers. You auction lower to find buyers. Because if something
in a way,
is selling,
look at it
it's a discount.
Well, in a way, look at it as like a big auction house. In a way, right?
It's 100% a market auction.
Right.
You'll learn that in the next class we attend. That if you don't understand market auction, like it's called market auction theory. That's the first concept you have to understand in order to be a successful trader, in my opinion, right? And a lot of people that did not know that coming into my Discord or learning elsewhere, they realize that and they're like, oh man, yeah, it makes sense. If there's can you not put $2 million for Balenciaga shoes as an ask price?
No, yeah, you can't. No one would buy it.
Yeah, nobody will buy it. So the auction is there. I mean, somebody can put that they want, a limit order, sell on Apple at 350. That doesn't mean they get filled.
Right.
So it's the same thing in the stock market. It's asking a bit. So hopefully this makes sense. But this is your first standard deviation, right? Which is your first 68% of volume is here. So, 95% would be here. And then 99 would be pretty much your high and low, right? Very close to high and low, where whenever you're above 68% of volume here and here, that means there's not a lot of interest. If there's not a lot of interest and we fall back inside, that's telling you the price is most likely not being accepted. There's not enough buyers up there to drive it, or supply was heavy.
That makes sense, because price action is not, obviously trading sideways or being doesn't like that area. So yeah, that makes sense.
Yeah. So back to this college cash, and I guess for a lot of others, hopefully this helped. But that's the concept of, I would say, the value area and the bell curve. So what we're looking at now is if we're holding this first SIG at 24ish to about 21, that's bullish, right? If we crack below, regain it, just like I believe on Wednesday, right? You guys saw it. Like, if you guys remember, what happened here, if you guys remember me and, was it Free? No, it wasn't Free. It was College Babe. I forgot her name. She was closing. I was closing at the same level. And then I took it long, and I asked her, did you take it long? She said, no, I didn't flip long. I just closed it short. But, you're able to catch some nice points on Wednesday taking it from here. I didn't catch a lot, man. I took maybe 12 or 12 and a quarter. But you could have rode that all the way higher to the value area high of the day, because they're telling you there's other time frame participants coming in, but it wasn't that strong. So how do we know it wasn't strong on Wednesday buying?
Still trading within value.
Say it again.
Not bad.
Bracketed market.
EJ, your mic's pretty far, man. How do we know that the short-term traders were in control?
And if you're in a bracket, then that's who trades the bracket, the short-term traders. Long-term
Remember the
traders
slide?
are looking for advantages.
Okay.
We did not get out of the balance, and we stayed within the initial balance.
There was no excess.
Okay. What else you guys got from this slide on the class? What type of day was it?
Neutral.
Okay. What else is there?
No range extensions.
What about the second bullet? Is that true?
Yes.
So let's take a look at it.
Okay.
So we went on the IB, right? IB's kind of sitting right here. I'm just gonna hide the candles, you guys. So IB's right here. Right here. We went above, we went below. If neither one wins on the extensions, that means it's neutral. That means that participation and confidence on one side is not there. Not to the low side, not to the higher side, right? So that means most likely, you know, we're awaiting more information. And that's exactly what they did. And if you guys remember, I said that most likely we're going to close somewhere in the middle. Do you guys recall that? And they went and they closed right at the extreme. They went pushed to the high side. When they push to the high side on something like this, it could mean, you know, a few things, right? There's something called neutral bearish day, neutral bullish day, extreme bullish day. And that's what they try to perceive here by closing at the value area high. That means, hey, we did not find value here, you know, we agree this is fair price, but we're going higher. And closing here typically indicates that they want to proceed to go higher. So now, you know, if they give us an opportunity, if that's the case and they give us an opportunity to hit this 22.25 level, that's a buy. That's an easy buy, right? Because they're just bringing the price for what? If you could lower the price of those shoes that you mentioned to, you know, 60% discount, or let's see what the discount in this case would be for them, right? If you lower that discount by, you know, 33%, let's say on your shoes, you could control that. Well, you know, maybe you would start buying it back up again. Does that make sense? Why short term we're in control? And long term participants showed up where?
At 72. At 72 and 17.
They showed up here, right? So they showed up in the G period. That's where they set the tail, right? Is the tail as big as you guys would want it to be on access? Is
No,
this
it's
a
not as
pretty,
aggressive.
not as aggressive, right? So I would say, I mean, it's there, right? So you can definitely treat this as access low, right? It's definitely there, but it's not as like, you know, it's prior week low, value area low. So it's not aggressive, but the bears also stopped. So they're able to push the price back in. And then the short term again went into control because short term is going to trade what? The balance. They're happy with the balance. They'll go along here and close it here. Right? Other time frame participants, they sell here and they're looking to close as much as they can, right? They're closing somewhere here and going back and buying. Okay. So let me close that. So for tomorrow, now that you guys have this, right? What is the key information that we need? This is your 2-week POC sitting kind of like right here. You can draw a little zone. This is your 2-week POC zone. Why is that important? Why would you want to know that?
That's the fairest price. You always want to know the fairest price.
Yeah, that's the fairest price for 2 weeks. So if you're selling shoes and the fairest price for these shoes is a $59.48 for past 2 weeks and the price gets to that level, what do you think you should do?
Sell it.
You should most likely sell it because you're going to have a lot of liquidity at that price. So now if I release these candles up here, what happens whenever we tap this POC?
They're selling it.
I mean, look at the price action. It's shit. That means they're exchanging a lot at that level. Hence, the volume is high. The TPO means time spent at that price is high. So they've spent a lot of time and volume at this level. So let's say tomorrow we lose this level, we go above it and lose 59.44. Could you short that to 25, 24? Certainly, right? You can definitely take that. Whenever you have price action around POC that looks like this, it's not the best to exercise heavy positioning in this area, because I even explained, I think on Wednesday, right before we got off, I gave you guys a level that they're going to hit right after ETH. I think it was 52. I said I was shorting somewhere. Where was it? This is Thursday. I don't know.
Wasn't it like 62 or something? To
Say it
up
again?
to
Yeah, it was
Wasn't it from
52 and a
51,
half or something
52?
like, yeah. And it hit it perfectly after the hours, and that's where it stopped, right? And that was mainly because that drive that they had was liquidity grab, right? And that's where you had the footprints to kind of identify what did they need to do to close it, right? And that's kind of what they did. So tomorrow, what I would pay attention to, if you're watching, a little bit tighter on a daily time frame, you can certainly look at the 2 days that you had here. Let me just go on 30 minutes. Let me just delete this so I don't freak out in the morning when I see a bunch of bell curves in my chart. Okay, so let's take a look at it now. On the daily, we are in balance. We had a balance that was framing down lower, but look at the stack that they're giving you here. So, depending on where we open, right? So if we open above this here, where do you think they go? If we open here, what are they telling you?
We're going to.
They want to go higher.
They're rejecting this value, and the bullish close on Wednesday was, approved. So most likely, at least we can target the mid, which happens to be the first sig, and that would be, I would say, pretty good for most of us, and we will call it a great weekend, right? We will catch 40 points or something. Let's say we catch 20 points out of this. It's a good day, right? If we crack this, then you have a little bit of option to go higher. You do have some access above the SIGs, and you should probably pay attention to them, even though they were swept before. There was some here, so you can expect to see a little bit of rejection at that 92. Remember that 94 was our weekly access high from the prior week. Do you guys recall that? It was right here, a little bit higher, right here. I'm talking about this right here. So 93.5 was our prior week access low. So that's pretty important to know, right? So I would keep that in mind. And then you see, if you crack this, you have the current developing value sitting right here. If they go above 602 right here, and they fail right here, what does that tell you? Where would you go next? You go right here. So most likely they're going to look to see if they can find, and this would become very, very critical level. Either we're going to be what? There's two things they can do here. What are they? What does price do? There's two things price
Accept or
does.
reject.
If they accept the price is higher out of this 2-week balance, what should they do? That means we're going to go higher, right? And most likely we're going to hit this second and third sig, which is sitting somewhere around here, right? So that's what we would look for. Does that make sense? Everyone?
Yeah.
Okay. So I'm just giving you scenarios how you can play it based on the price action. If we open here and we quickly fail, I would say 99.99% chance that you're going back to this 49.50 level, this zone right here. Okay. Losing this, I would say, cumulative 2-week POC opens up the doors again for 25. And there's something that needs to happen here, right? Whenever you're in imbalance, who is showing up here in this zone? Who are you expecting in this area? Above the value, who's expected here?
Sellers.
Initiative sellers.
Not initiative seller, responsive sellers.
Responsive.
Just like our friend that's selling shoes, he said he would sell it at 1,700. Right? Initiative sellers would need to show up where?
At the bottom.
At the bottom would be initiative sellers. They initiate the price lower. So if our friend, let's say he bought a bunch of shoes at 1,200 and the price is coming at 1200, and not many buyers showing up, and he's like, oh crap, I have so much inventory, I need to get rid of it. Well, then he would need to initiate what? Instead of this level, he would need to sell it at this level to get rid of the inventory and take a minimal loss.
So basically, give them price they can't turn down.
That's exactly right. So you become an aggressive seller. So you wanted this price, but you can't get it at that price. Now you have to discount the price. Okay. Initiative sellers show up. So if you guys remember the slide from the class, let me just bring it up. Let me just show you guys. You guys remember this?
Yep.
So if you have value, right, just like we did here. So think about it. We are in value here. This is our 2-week value sitting, we identified the first SIG that we just talked about, which is here and here. Selling above here is responsive. That means responsive sellers showed up and they sell. Buying above here is initiative. Means somebody's buying market, right? And they want the price to go higher. So they're initiating price discovery higher. Selling below is initiating. Buying below is responsive. If something goes below value for the 2 weeks, I'll buy it and I'll sell it. I'll sell it in the next couple of days when it gets to the other opposite side, right? Does that make sense? Does that click? Whoever responded earlier that it would be initiative. Whoever that was, that you, Chris?
No, that wasn't me, but I understand.
Okay.
Yep. Thanks.
So when price is consolidating, right, that means a lot of exchanging is going on, and kind of everybody likes the price there.
Exactly. So, and that's what volume on the right is telling me. Wherever you have a high volume node, think about it. If I tell you that there's a lot of buyers at 1500 on your shoes and a lot of sellers, because you can't be a buyer if there's no seller. So if this high volume node here is heavy, that means there's a lot of exchange in this area. They're just consolidating. It's just a bracket. And if I zoom out and zoom in, now I can see that there's a bigger bracket here, right? So there's a larger bracket inside here. But see here, there's volume, drop, LVN, low volume node. And then you have massive, and then you have a really large, high volume node where we're at right now. So if they're able to crack this POC here, probably they go here, they can go up to here. And if they're able to clear, let's say this level here, most likely hit this one, you're going to have some selling right here. Currently, there's a supply there, right? And that's from that, I don't know, what's that FMOC day or whatever it was. That Wednesday, it was a Wednesday when they sold off. So they sold off, and we've been in this range of that one day for 2 weeks now. So let that sit in for a while in your head and what that means. But we haven't really had, if you had really aggressive buyers, shouldn't they have absorbed the seller already by now in 2 weeks?
Yes.
Hopefully, right? So that's how I look at it, right? And then you can also do some fibs and find out where's the discount zones.
Big data tomorrow, Shorty.
No, I know, man. I think tomorrow is, I hope we crater, but yeah, tomorrow is a massive day.
Yeah.
I think it's probably the most important NFP
In a while, yeah.
I don't know if I've seen one this important. I don't think they're going to cut rates again, 25.
I'm with you.
Yeah, there's no way. I do see a big bank coming down here soon.
Oh, they may cut rates when shit hits the fan, right?
You can cut the rates, right? The only reason why I could see them cutting is because of the treasury and the debt payments that we have. Because you're going to be north of $1 trillion a year just in payments, right? Then you're gonna have big banks that are,
Yeah, well, Bank of America is going to. Yeah.
I mean, think about all the hold to maturity stuff they have on their portfolio bond, right? If they're to do mark to market on some of
Oh my
those,
God. Yeah.
I mean, it would be 1929 all over, probably within a day.
Yeah.
That means what? Like the stock market would crash?
It would be
Big-
worse than 2008 by maybe 50 times.
If that saying that's if they cut rates?
No. If the banks realize their losses on hold to maturity bonds. So bonds, they have two type of bonds. You can hold to maturity where you buy a 30-year bond and you don't have to realize losses on those bonds for 30 years.
Okay.
Banks have those, but the banks have an issue when the yields go up, right? Because they're most likely tied, in cheaper bonds.
Right.
So now there's other bonds that are pricier and they offer lucrative, yields back. So now they're in trouble. And I would say, Bank of America was up there. If I remember, Tom wasn't. Wells
Yeah, Bank of
Fargo.
America is the big one. Yep.
Wells Fargo is up there north of $100 billion in unrealized losses. And that puts them well over there. And, just go to your bank, whoever your bank with. Like when I go, I'm going on January 12th, whenever that is. Let me see when I have to put a reminder. Actually, on the 13th, I'm going to my JP Morgan banker, and I'm gonna be like, I want 6% on my CD. He says no. I pull my money and I tell him close my accounts, and then he's like, hey man, maybe we can do 5 3/4.
Yeah.
And I'm like, okay man, we'll do 5 3/4. That's fine.
I did not even know you can like negotiate with a bank. I had no idea.
On CD rates? Oh yeah, yeah. You can definitely negotiate. Yeah, just don't let them auto renew. If you let them auto renew, you'll never make money. Threaten them to pull out money if you're in Bank of America. See how they treat you.
If I recall correctly, the unrealized losses there is like twice the size of the market cap.
Yeah, probably. I mean, I can find out what it is.
Yeah, I'll check tomorrow in the terminal. Yeah.
Yeah, you can check terminal. Probably have it in a couple of clicks, right?
Yeah.
So yeah, I mean that's big, and some bank is gonna need, and these are 30-year notes, long-term loans, and then you're gonna have a lot of liquidity, and I think the spread between those is getting worse again.
Oh, it
The
is.
30 and the 2.
10
30
years,
and 2.
470 again, or 460 something. So
Yeah. So, and I think mortgage rates are about to skyrocket first quarter again. So let's see. So I'll watch this, right? I mean, if you're, watching on a daily time frame, I would just say watch for the value area low, value area high, especially where we open. Tomorrow's open is very important, right? How we finish, right, the week. Ideally, we want them to crack that low or close towards below this. Close below that 24 would be very good. Close below this 875-ish, 74, 75 would be a bear's dream, right? That would be ideal. But tomorrow, where are we right now? Oh my God. So they gave you, yeah, they're going to 50 here shortly. They're gonna reject right here. So whoever's long, if you got lucky tonight, they're gonna reject here in a couple of minutes. So keep an eye on it. But yeah, tomorrow's open important. If they open within a value and they dip it to POC, I'd buy that, right? I'd buy that dip to POC because it could launch us to the highs, and that could be really nice play here. And this is the place where I say buy here, put the stop loss somewhere below, maybe this low or even this low right here. If you do that, and you do something crazy like this, I think you could make this trade work tomorrow. I mean, that's 5-1. Something like this. That would be, 5-1 trade. So that's equivalent to you buying your shoes for 1,000, selling them for $5,000, right? So you would do that. So I would watch for this. A peak above here, open, bring it back to POC, we rock it. If we open here and we immediately crack this, we don't get a bounce, retest from the bottom and don't reclaim this area, most likely we're going to all the way 25. So you would kind of flip this, right? It would be a short position at that point. So the open is fairly important. I'll trade live with you guys tomorrow. So I think the virus is out of me. So I got my energy back. Should be good to go. So I'll keep an eye on that. So those are the levels on the daily upside here. And then if you guys think about this, you do have value area low, but this one's not very important. I don't care about that value area low when you're inside a bracket here. I care more about the extremes, these right here. You want to be a buyer here, you want to be a seller here, profits here, and that's it. We care about open tomorrow. Tomorrow's open is very important. And remember, there's news. I think it's at 8:30.
Yep.
Yeah, yeah. Don't trade 9:30. Well, 8:30, please. You're gonna regret it shortly. Like a minute after, you're gonna be crying. So I would not trade it.
Which indicator do you put on? Is this TradingView?
Yeah, just trading you.
Which indicator do you put on to get the letters? If you know what I'm talking about. Like,
so the letters is your market profile. That just tells you, you know, where most of the time we spent, right? Each letter just represents, like you see how I broke the letters now. So
yeah, I remember I was in your lesson from, I think it was, I don't even remember, but you did a lesson on them.
Yeah.
So I do remember that. What is the indicator called?
So it's called market profile, TPO. So if you go under, if you click on their indicators, go under technicals, profiles, there's going to be time, price, opportunity. Remember how we said that there's 3 components that are important: time, price, price, and volume.
Mm-hmm.
If you don't have volume on your supply of shoes, well, guess what?
No one's gonna, yeah.
So, and
so do the different letters represent different things, or does that not really matter?
No, they do, right? So each letter represents different things. So I'll give you a quick snippet.
So like Q represents something differently than A.
Yeah. So A period is 9:30 to 10. Okay.
Let me just screenshot that. Okay.
You have it in the Discord. You have this whole thing in this here. So each period is different. It's 30-minute increments, A, B, C, D, and it goes to M. N period, you know, TradingView is showing it still, but they won't in the near future. It's just a settle period. It just means that's where the price settles, right? Closes.
So from what I remember, if you have a long line of A with nothing next to it, just a long line of A, that means, say it's up, that means that's a strong high, correct?
There's more to it, right? We'll cover it in a class. I don't want to blow your mind up, but basically there's only a few things, right? If it's a selling tail or a buying tail, selling tails will have, you know, single prints on the bottom, on the top or bottom. So buying tail in this case would be this, where G period in this case doesn't have a friend next to it.
Right, that's what I'm talking about, yeah.
This would be indicating other time frame participants that somebody stepped in and bought it, and I would believe this one because it was below prior week low, value area low, and that's big because you said you would buy shoes below value.
Right.
That means you're buying to make money and you're going to sell it up there.
So if that shows up, that means one of the big dogs bought, basically.
But they have to be at a critical level, and they did. They showed up at a pretty important level. If this single print, let's say, if this G period was not here till like this level, and this was all single prints, you would be gapping up tomorrow, like a couple of maybe 30 points.
Okay.
Yeah. So the more
and
single
so does it
prints
matter
you have,
which letter you have?
No,
there?
As long as it's not letter M on the bottom, then it matters.
Okay.
Because letter M, as you'll learn in the next class, that just means there's a spike.
Okay.
Right? That would mean it's this. And that means the market, remember, time, price, opportunity time-wise, they didn't have enough time in a day because M happens to be the last period. So if you look here, right, look at the period from 3:30 to 4. What is the period?
Yeah, the market's about to close.
So it doesn't have enough to know if it would have a friend next to it. So the next day, the letter A tells you if it's going to be next to it or not. And that's
Okay.
called spike if you're going to reject it or accept it.
Okay. All right.
The longer the tail, the single prints, the more aggressive they are. Does that make sense?
Yeah, so that's why it's a strong either low or high, right?
That's correct.
Okay.
Yeah. Mm-hmm. You'll get this. I think you're starting to get it. You have good questions. So. All right. Well, that's it for me, guys. I'm going to hop off, go get some sleep, and I will see you guys bright and early tomorrow.
You'll be in
Shorty,
here.
see you tomorrow, man.
Yeah,
Trading
I'll
live?
be on the same, orb chatter, and I share my screen and trade live with you guys.
Okay. Thank you so much for everything. I really do appreciate it.
Yep. Have a good night, guys. See you.
All right.
Bye.
Thank you, Shorty.